To kick off this discussion, David Schwartz states he has never been more excited about XRP and the ecosystem, and I couldn't agree more. Now, don't get it twisted. I can be critical about elements of this ecosystem, areas where I think we need to improve, but I truly am more excited today than at any point in time when I look out over the horizon and see what's going on with this ecosystem, the chance for real adoption, for onboarding, builders, users, just some really amazing stuff. We're going to hear from the Commander-in-Chief his vision for the XRP Ledger here for the foreseeable future. I haven't heard this whole thing yet, but I'm looking forward to seeing what David has in store for us.
I come on, I talk about where we are, how we got here, where we think we should be going. We will not break with tradition. I'm going to do that again this year. But I just want to start by telling you why I'm so much more excited now than I have been before. First of all, it's because, this crowd, just the number of people, these events always energize me. But also, I'm an old guy. I lived through the internet revolution. In the late 80s, early 90s, I kind of felt like I was the only person who knew the internet existed, or what became the internet existed. The technology was nascent, and internet culture was a bunch of nerds, in some garage somewhere, and then there was popular culture. Today, internet culture and popular culture are the same thing, right? There is no distinction between internet culture and popular culture. We're starting to see that happen with blockchain right now. We're starting to see that turn, whether it's blockchain politics becoming an issue in the election in the United States, whether it's the Bitcoin ETFs and the ETFs launching, stablecoins, institutional projects that are enabling DeFi ecosystems on the blockchain. We're starting to see that path to mass adoption really happen. We're not the only people who know about blockchain anymore, right? It used to be that the only people who knew about blockchain or cared about, crypto were the people who were in the space. But there's people in the finance space now, people in computer science. They all understand what's happening here. And that's exactly what led to mass adoption with the internet.
It happens so quickly, you don't recognize it. You have crypto, this hot button topic for the current election. Who would think that cryptocurrencies would be front and center in a presidential election? You have BlackRock, they're getting ready to launch an autonomous, exchange on the blockchain, taking that concept of ETFs and bringing that, extrapolating that into the tokenization of stocks, securities, treasuries, things like that. You have PayPal with their own stablecoin. This is what it looks like as you go from this hobbyist kind of fringe level thing into the mainstream, and it happens so fast, you don't really realize it's happening until it's too late. And that's what's going on right now as we speak, both for crypto at large and I think XRP.
So let's talk about where the XRP Ledger has gone in the past, almost 12 years now? It is fully decentralized.
Sorry to stop it again so quickly. I hate that term. There is no such thing as fully decentralized. Everything's about design choices. It is sufficiently decentralized to ensure your payments and your trades on the DEX, things like this, are settled in a decentralized manner. But there is no such thing as fully decentralized.
There's more than 600 nodes processing transactions and maintaining the ledger. And importantly, each of those nodes enforces all of the system rules. And unlike on most other blockchains, those nodes are enforcing censorship resistance as well. There's more than 120 validators. We're probably the only major blockchain with no in-protocol incentives for block production or running a validator. People run validators because they want the network to work. They want the network to be robust. They want the network to be reliable and decentralized. They're run by individuals, businesses, universities. There's over 1,750 apps, exchanges on mainnet built by a diverse set of global developers, many of whom in the room with us today. More than 2.8 billion transactions have been processed. For some time, more than 50% of transactions being processed on public blockchains were on the XRP Ledger. It's gone down a lot since then because the rest of the universe has grown. But the XRP Ledger has continued to process transactions at that high rate. No transaction has ever been discriminated against, filtered, censored, misexecuted, dropped. mishandled, right? It is a fair system because every single node on the network enforces that type of fairness. There's more than 5 million active XRP wallet holders around the world, and that's a real number. On a lot of other blockchains, for example, on UTXO-based blockchains like Bitcoin, a single user probably has a number of addresses. And so the address numbers may be very, very large, but those addresses don't actually reflect users, right? So those 5 million are probably real people who are using the XRP Ledger, and they're using the ledger directly, right? There's a lot of people who hold Bitcoin, hold Ether, who will never use those blockchains directly. These are people who are actually potential customers for projects built on the XRP Ledger because they have access to the ledger. They have their money on chain. Market capitalization of XRP is in excess of $30 billion. Makes it about the 6th largest cryptocurrency, depending on exactly what you consider to be a cryptocurrency. The number of...
Before we get into the builders, and we'll talk about that, one of the greatest attributes of the XRP Ledger is it is so reliable. They tell us supposedly it went down at one point in time. No one noticed it, right? You had to get Nick Bugalis to actually confirm that happened. That was how minor it was. David Schwartz says, well, it didn't really go down. It was operating as it is designed to do. So, you have that long-term reliability over a decade. That's hard to match. There's only a few blockchains that have been around as long or equally as long. And it's just continues no matter what stress, what load is thrown on the ledger, it continues to chug along. You heard his statement there, a surprising stat I didn't know. At one point in time, 50% of all blockchain transactions were happening on the XRP Ledger. And lastly, I'll tell you this from an infrastructure standpoint. When I first started out, you had to be kind of a weird person if you used Toast Wallet. I like Toast Wallet myself. But there weren't a lot of active users. You hodled your coins in a Ledger Nano, and that was about it. And now most people have a Sum wallet, and they're kind of comfortable doing stuff on the DEX. I think it's only going to get better with AMMs. So we've come a long ways. We all want to have, that end vision of tons of applications and, massive daily use. But we're getting there, slowly and surely. And let me bring up this. He's going to bring up the metaverse. And, they have all of these projects listed up here. Where's Expector? Where's Casino Coin? These are two top projects. And maybe they have a beef with Expector because the head honcho over there said something unkind to them. But, this isn't a Ripple event. This is an XRP Ledger event about builders. And whether you personally like the company or the person in charge of that company, if they're a major project, one of the top projects, I think you got to list them here. Especially because David's going to tell us here. The metaverse and gaming area, it's kind of light. There's not a lot there. Don't be stripping people off of here, right? Those are two primetime projects from the XRP Ledger. List them if they're doing big building, because I don't think your talk is as good without stating the facts, even if you have personal vendettas.
Contributors building projects of different types on the XRP Ledger is enormous. As you can see on the slide, we have a large group of companies that are building wallets, custody, compliance, and security. These are tools that enable people to hold XRP, use the XRP Ledger, participate in the ecosystem. Infrastructure, tools, and analytics companies. There's a lot of stuff going on the XRP Ledger. The transaction rate is high. If you can't understand what's going on, you can't interact. Wallets need backends, right? There needs to be reliable hardware infrastructure. The gaming and metaverse space is a little bit on the small side, but it's been very exciting and interesting. Companies like Forte building interesting metaverse projects. And of course, marketplaces, DEXs, real-world asset tokenization and lending. These are projects building on top of the issued assets, the NFT technology, the DEX, the XRP Ledger's DEX. And then, of course, core ledger development. Ripple can't be the only people building, on the core ledger. Interoperability is extremely important. I'll talk more about that later, but we're not going to have a compelling ecosystem if we have a bunch of separate islands that have different functionality that don't connect. That's not going to be a great user experience. And then payments and stablecoins and on-ramps and off-ramps are absolutely essential. For most of us, It's not difficult for us to get money onto or off of the blockchain. A lot of us are privileged enough that we have money that we can play with on a blockchain that we don't even really think about as real money. In the early days of Bitcoin, we jokingly said, well, I have my bank account and then I have this magic internet money, right? It is great to be able to be in a position where you can do that. But realistically, if we're trying to adopt to most of the world, it's going to have to be the money that they get paid at their job. It's going to have to be the money they use to pay their rent. It's going to have to be the money that they use to buy groceries, because that's the money they have. They don't have a giant pile of money to mess around with this cool new technology. And so we have to connect. If we don't connect, we will not be able to get mass adoption. It'll always be.
You know, that's a big point. Ease of use, being able to get your real world value, typically dollars, onto the blockchain in a usable way. I think that's why the stablecoin is going to be so vital here. You know, I want to bring up another point. We are seeing a lot of, arguing going on Twitter about devs and are they getting enough support? And a lot of people say, well, developers, they need to build profitable businesses. They shouldn't be looking for grants, money from Ripple. They should do it on their own. And I get that, and that is where we're going for. But I'll tell you this. How does Ripple operate? Well, they were gifted 80 billion XRP. That's essentially a grant. And without that, they wouldn't be where they are today. And if you took all their money away, you took all their XRP away, and they just had to survive on payments, like almost all of their current revenue. I'm not saying where we're going, not saying where they're headed, but they make next to nothing from sending payments and doing. They're actually paying typically people to use ODL. So Ripple, after a decade, couldn't survive. They would go bankrupt if they didn't have that grant, that free allocation of XRP. And as David said here, we need more people like them doing big things, and that takes a commitment of money. Ripple got all of the money. They got all of the incentive. And I don't know how you do it, but they have to find a reasonable way to make sure they support projects that show promise, so we get some other big time projects on the XRP Ledger, builders, services, dApps, people that can have success, and that's going to take continuous support. Because again, it's been a decade of selling XRP, raising billions of dollars, and Ripple's not self-sufficient, not today. If they could not sell XRP, they would go out of business. It's not easy scaling a blockchain, and I just think there's builders out there that need more support. It's hard to say that these small-time builders should be self-sufficient when Ripple themselves essentially today still relies on grants. And they're huge, and they're a household name. And, they still need that grant funding, that XRP they sell every month. They need that to survive.
Limited to a bunch of privileged rich people. That's not exciting. So I want to take a step back, and I want to talk about that inflection point that I was talking about and what's going on right now. And one of the places where you can see that the most easily, I think, is with stablecoins. The current market cap of stablecoins is around $160 billion, and it's growing so rapidly that number is, it's going to be obsolete by in months. It's expected to grow to almost $3 trillion by 2028. And this is the next statistic is, I think, the most important one. Remember, I was talking about bleeding over into popular culture. It's great if everybody in the Bitcoin space thinks Bitcoin's great, if everybody in the crypto space thinks cryptocurrency is going to take over, everyone in the DeFi space thinks DeFi is going to be the next big thing. What about people outside the space? 97% of institutional investors believe that tokenization is going to significantly affect asset management. These are people who they're not Bitcoin people, they're not crypto people, they're not blockchain people, they're not DeFi people, they're institutional investors. These are some of the most conservative people in the world, right? And they think that the technologies that we're building are going to revolutionize their industry. That is that bleed over into popular culture. The market value of tokenized U.S. securities alone is $1.5 billion. This is a new space. So that is going to, that number is probably different by the time I get off this stage. And of course, the growth of tokenized assets, $16 trillion forecast by 2030. I think that's probably going to be conservative. It just makes sense to get into these spaces. If DeFi spaces and tokenized spaces are where the investors are going to be or where the money is going to be, that's got to be where the assets are, right? The assets are going to chase the money.
This is huge. You see the first RWA that we've seen has success with stablecoins, $160 billion current market cap. And it's going to get a whole heck of a lot bigger than that, by the way. Massive growth. Ripple's going into that. They have to have success with stablecoins, and they got a great competitive advantage. They got the blockchain technology backing up that stablecoin. They have the most usable and efficient stablecoin in the world. You're going to be sending a payment in a stablecoin. You're going to use it in everyday life. It's fast. It's cheap. You can trust Ripple, the custodian. You can trust the blockchain, the technology backing it. They need to have big success there. And again, even though we're at 160 billion, it's going to grow like wildfire. You have tokenized asset forecast 16 trillion. To me, this is exciting because this is right up the XRP Ledger's wheelhouse. It was designed for this from day one. Ryan Fugger's original vision that predated Bitcoin was essentially, throwing everything into the blockchain, not using, tokens, but throwing real world value in there. And then you have tokenized securities right now, U.S. Treasuries specifically. You're seeing a lot of action around that with BlackRock, launching their Build or BIDL, however you say it, platform, which is exactly this. Tokenized U.S. Treasuries. That's going to be a hot area with a ton of growth. Ton of institutions onboarding their customers into blockchain. This is going to be big growth, and it's a place where the XRP Ledger can compete. And in a lot of these areas, it can dominate. It doesn't get any more exciting than that.
So what does Ripple think that we need for the XRP Ledger to benefit from this? Well, we need core financial primitives, right? We can't have real-world asset tokenization if we don't have primitives to launch tokenized assets, right? We can't have on-chain lending if we don't have primitives for on-chain lending. And real utility has to be the guiding principle. We have to build the technologies that are the things that the market wants, right? We have to build a product that fits the market demand. Extremely important that people can build and launch compliant projects. And this is the key thing. We want enterprise projects that are compliant, but that bring customers into blockchains, right? If enterprises use the XRP Ledger just for payments, that's great. That's not a bad thing. But that's not going to bring their customers onto the XRP Ledger. If they use the XRP Ledger to launch tokenized loans, that's going to bring the people who are going to fund those loans and who want to return onto the ledger. That's the difference in the sort of institutional DeFi type of adoption and the traditional institutional adoption that we've seen. We really see that with stablecoins, right? A stablecoin is probably one of the most regulated products in the crypto space. If you look at companies like Circle, Tether, the forthcoming Ripple stablecoin, these are going to be heavily regulated products, right? Most of us will never be able to get a stablecoin directly from its issuer or redeem a stablecoin with its issuer. But there are millions of people who can hold USDT, hold USDC, hold the forthcoming Ripple stablecoin, who knows what jurisdiction though. They'll be in real DeFi ecosystems. That's the difference. But it won't work if everybody has to build their own compliance. I'll talk more about that a little bit later. And developers have to have great experiences. One of the biggest problems in the XRP Ledger space is that there just are not a lot of people who are able to develop in that space. It has to be easy. It has to be simple. The documentation has to be good. The support has to be there. The tools have to be there. But if we can build those four things, we can have the foundation for an institutional grade blockchain with the XRP Ledger leading in these institutional DeFi applications where regulated products can enable true DeFi ecosystems. We don't want to launch a regulated product on a public blockchain as an island that doesn't connect. There's no reason to do that. But it's obvious why you wouldn't launch USDC on a private blockchain, right? The whole point of a stablecoin, the whole point of tokenized securities, I want to use them as collateral for loans. I want to rehypothecate them so that other people can, maybe I want to tranche them so I can have different investments with different risk profiles. I want to put together a DeFi product that's backed by an institutional stablecoin, that's backed by tokenized securities, that's backed by real commercial grade lending and real estate lending. That's what the XRP Ledger could do. So let's talk about where we've gotten and where we're going to build that.
I'll tell you this. To me, payments were a little bit of a struggle bus. Us telling the world, you need this. You need to switch over to this. You looked at MoneyGram. They were a little more accepting of this technology. But, a lot of the different payment service providers and banks and institutions, they're kind of like, Maybe once it hits scale, we'll be interested. What they're doing here, this DeFi stuff, it's different. Your institutions are knocking on crypto's door. You have BlackRock that's like, going all in on this space, and a lot of other ones. They want this. They need this. They understand this is the future and how they will survive and grow their businesses. And so I think this is going to be an easier adoption curve because we're not having to grab people and say, you need to switch to this new technology. They want in. They're knocking down the door. And that's quite different than what we've seen in the past. And some of that is just people getting comfortable with this technology and understanding, this has real fundamentals here and this is the future. But part of it, I think, is just a really good fit to be adopted right now and in a big, big way.
I'm going to go into more detail on each of these, but I just want to give a broad description of them on one slide so that you can sort of get the vision for where we're going and where we are. So if you get too down in the weeds, you kind of lose the big picture. So big picture, we have the automated market maker. It launched in March of this year. There was a little bit of drama around the launch, as many of you know. I see some smiling faces. I'm glad we're past that, but it's working very nicely now. The lending protocol has been released. We'll talk about that in more detail, but that's another example of that sort of, that'll be very regulated lending. There'll be commercial real estate lending, but it will be tokenized on the back end, so it will enable a DeFi ecosystem. Decentralized identity, if every project has to launch its own identity infrastructure, it's just going to be terrible for everyone. Oracles are critical for things like over-collateralized stablecoins, tokenized collateral. You need to have pricing information. Multi-purpose tokens will be proposed in the third quarter. It'll fill a gap in the way assets are represented on the XRP Ledger. I'll talk more about that. And the EVM sidechain. So I'm going to go into more detail of all of these, but I think this is a roadmap for institutional DeFi.
I don't totally understand EVM sidechains, to be honest with you. I get it if you're doing something very specific, unique, you need some new feature set that's not on Ethereum. But to me, let's not build a chain that has nothing and hope we see some building and say, well, this is XRP because it's a sidechain. I say make the Ethereum blockchain our sidechain, right? If you're going to do smart contracts, do it on Ethereum, but, really connect in there, pipe into that blockchain, and start pulling over all of the payment volume and all those transactions and all that settlement. It's the #1 altcoin blockchain in the world, but we can really siphon off a ton of that action. And you're adding value to their ecosystem, and you're also pulling away a lot of value. I really think that would be the better place to focus on. But I get what they're doing, and a lot of people will want to build on this EVM sidechain. I think someone's actually contracted them to build it out. So it is what it is. AMMs, I think, are huge. That coupled with stablecoins will allow small projects to launch and scale and get to that size where exchanges look at you and go, well, you have a lot of volume on the AMMs. You have a big user base. There's a lot of demand out there. Okay, now it makes sense to list your token. And I think that's what we've been missing in the XRP Ledger ecosystem. It's tough for someone to start out very small and scale up in a big way because you just can't, get that community built and that trading, going on a daily basis and starting to grow. And so I think this will allow a lot more projects to start scaling up and get to an appropriate level where now exchanges want to list you. I think that's been one of the missing parts of this ecosystem.
Let's start with the automated market maker, something that is extremely near and dear to my heart. As I've said many times, I've been experimenting with trading and volatility harvesting and different types of strategies for probably 30 years now. There is a tremendous amount of volatility in digital assets, and just logically there shouldn't be, because volatility is exploitable. There are trading strategies that profit from volatility. It's really simple, basically. You sell high and you buy low. It literally is that simple. And that's what the automated market maker does. It executes a trading strategy. But the most interesting thing, I think, about the XRP Ledger's automated market maker is how it integrates with the other functions on the XRP Ledger into what we've been calling the super DEX. The XRP Ledger has order books. Some people call them central limit order books or CLOBs. And what that means is people place offers to buy or sell one asset for another. It's a trade. And they sit on order books to be taken by other people. Many blockchains can't implement order books because most trades are not taken. This is just the way markets work. Most people who place an offer to trade, nobody takes that offer. The price changes before anyone takes it, and they rescind the offer. If it costs you $4 or even $2 to place an offer, then order books will be very, very limited to only really major assets. In fact, in some cases, there just aren't any assets that big, and order books just don't work. And so on most EVM-based chains, you just don't have order books. You only have AMMs. The XRP Ledger has order books. These are very capital efficient for popular assets, but they're not very good for unpopular assets because somebody has to actively make a market. These facilitate manual market making. So I can make a market between XRP and a USD stablecoin by placing offers into the order books. But someone has to do that. And there's not going to be anyone who's going to do that for hundreds of assets. Automated market makers take that long tail of assets. So those on-chain order books operate 24/7. And the automated market maker executes a trading strategy that harvests volatility. So if you have an automated market maker between, say, XRP and a USD stablecoin, it will get revenue not just from market making, but also from volatility harvesting. The AMM that we designed for the XRP Ledger has a couple of unique features. One of them that I think is important is just that it benefits from the XRP Ledger's core architecture. Transactions are very cheap and very fast. If transactions are expensive, that's going to limit people's ability to interact with the AMM, and you're going to sort of lose a large number of low-value transactions. A small number of high-value transactions is good, but a large number of low-value transactions is just as good. And if you lose that, you're missing 50% of the picture. There is no MEV, there are no block producers, there's nobody who controls the order of transactions on the XRP Ledger, and that helps to prevent money from essentially being taken from the liquidity providers. The continuous auction mechanism, this is an exclusive that we developed, that takes some of the revenue that would have been given to arbitrageurs and gives them to the LP token holders. So the basic gist of this is, let's say you're an arbitrager and you calculate that you could make $100 a day. The XRP Ledger's AMM implementation sells execution privileges that allow you to do the majority of the arbitraging. So if you're going to make $100 a day from that, you have to bid for the privilege of arbitraging. And you might bid, let's say, $90 a day to make that $100 a day, which means instead of the liquidity providers losing $100 a day, they only lose $10 a day, which reduces impermanent loss and increases yield. And there's voting over the control of the pool trading fees. The lending protocol is another one of those institutional DeFi applications. It's enterprise consumer lending and real estate lending. It doesn't change the underwriting portion. And of course, if someone doesn't pay back a loan, you have to sue them. You don't sue them on chain, right? Or you have to negotiate with them. Maybe they're in bankruptcy or whatever. That is all done the exact same traditional way. What's unique is the back end, where the capital comes from and where the payments go. So the way the proposed lending protocol works is there's a single tokenized pool of the asset that's going to be lent. It could be XRP, it could be a USD stablecoin. The manager who owns each lending pool will decide who gets a loan, how much the loan is, what the term is, what the interest rate is, and they will actually approve the loan. And then the borrower will be able to extract the funds from the pool. When payments are made, the payments will be determined by the pool. So on one side, you have this heavily regulated CeFi, centralized commercial lending, and on the other side, you have a tokenized back end. The underwriting, the risk management, litigation if necessary, contract execution, all of those things take place off-chain. A unique feature here is on-chain first loss capital protection, which helps to protect the lenders in case there's a small number of the loans in the portfolio that don't get paid back or go bad.
All right, I think we'll stop it there. About midway through, I'll watch the other half and see if there's anything else we need to touch upon. But there's some other talks I want to get to. We have Wind gives a good talk. And we also have Kaplan and a few others. So I'll check out the second half. I'll tell you this. I think we got all the features. They're coming. We're going to have that functionality. What we need now, as David Schwartz would say, is interesting assets. You have XRP, one of the most interesting assets in the world. But if you want to put XRP in motion, you have to have other assets to bounce off of. Stablecoins, I think, is the most important start. And let's hope that Ripple's able to launch that in a successful fashion. But we need even more beyond that. And I think we're starting to see that happen. So we'll see how that grows. And bridging could help do that. You can bring over assets that are on inefficient blockchains like Ethereum. And you have a lot of very valuable assets that people would like to trade for cheaply. A lot of people within the Ethereum blockchain are used to doing so on layer 2s already, so they're comfortable with that. So bridging could help with that, bring on more interesting assets. But that's going to be key, because you can have all the functionality you want, but if you don't have something people want to do on your chain, it's not going to help. But I think we're on the right track here. They see the vision. They get this idea, this DeFi. And yes, it's for institutions from Ripple's standpoint, but the capability is there for us, regular retail users, to use this blockchain in a practical way. So again, I think they're really firing on all cylinders here with what they're building out. And we'll see if we can start onboarding people to this and get them using it. And I think they will really like this system that they're rolling out. Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.